Today is Wednesday, September 24th, 2025, and there's a couple things I wanted to talk about today. One being a new stock that I think I've mentioned before, but I haven't made a move on it yet. So that's going to be kind of interesting. And I also today sold another covered call on Robinhood, much smaller and much more closer expiration date. But then we're also going to talk about uh, could there be a market crash or at least a correction here in the short term future or the near future, I should say. But today I am up almost 0.5%, which is almost the opposite of what the QQQ did today. And of course, if we take a look at my recent transactions, you'll see that I did sell a covered call at the 131 strike expiring at the end of this week. And I did collect $100 in premium. So if this one hits, I'm hoping it doesn't, but if it hits, I'll most likely roll it out to next week. But I've been selling a lot more covered calls, it seems like, in my more recent videos. I haven't gone as hard into covered calls as I could have because I still have 1,000 more shares of Robinhood. And if I sold 10 contracts expiring at the end of this week, I could have collected $1,000 in premium expiring basically in 2 days. But as I've said in a previous video or in multiple previous videos, I have no intentions of selling Robinhood. Robinhood is a long-term stock that I would like to hold the rest of my life if possible, as long as they continue executing. But now we're going to get to my Roth IRA, which is a little bit more in line with what the Qs did today. It is down 0.5%, up a little bit after hours. But as you guys can see, there is a brand new stock in my Roth IRA, which is Sweetgreen, ticker SG. And I know I've talked about Kava in some of my previous videos, and I am seeing a similar setup on Kava as well as Sweetgreen. But the reason why I went for Sweetgreen in my Roth IRA is just because the price per share is a little bit lower. So I'm able to buy a lot more share quantity, hopefully to get to 100 shares as quick as possible. So when it eventually does go up, I can start selling covered calls on it. But to kind of give a brief overview as to why I pulled the trigger on Sweetgreen today and possibly could pull the trigger on Kava here in the near future. Well, there's a variety of different reasons. Number one being, I think these healthier trend restaurants could be the future. And it could definitely take up a lot of market share from existing stagnant brands. So here on X, I did go ahead and ask Grok to pull up all these metrics for me. Now keep in mind, Grok can be wrong sometimes, so don't completely rely on Grok or my video here. Do your own research, of course, but I did ask Grok to pull up a whole bunch of metrics for Sweetgreen, and they did go ahead and give me the free cash flow per share annual amount 0.63. Obviously no dividend. They do have a pretty decent 5-year revenue growth trend. They have a decent price to sales ratio. Tangible book value per share is basically $2, so it is a steep drop from here if it does end up going there. And of course the return on capital is not looking so good as of right now. But another thing that caught my attention is that short interest. A little over 16% of their shares are short right now. And if we take a look at Sweetgreen on the weekly chart over on TradingView, you'll see that on my indicator over here, my custom indicator, it's had multiple false signals. So as I've said in my previous video, when I did go over this indicator, no indicator is perfect. So don't, rely on one or two or a custom one that you guys will eventually be able to make when Robinhood releases that feature. But anyways, let's go all the way down to the daily chart. And as you guys can see, it has been consolidating since August 8th. So since August 8th, it's just been consolidating, not really doing a whole lot. And we have this very nice gap all the way up to $12 a share. So that is another reason why I pulled the trigger on Sweetgreen today. The free cash flow per share is looking decent. Obviously, if they can bump that up to 80 cents a share, then that will be about a 10% free cash flow yield, which is a good number that I like to see. Obviously, a decent amount of shares are short right now, and we have this very nice gap for anybody that cares about technicals, all the way up to $12 a share. So that is why I somewhat pulled the trigger on Sweetgreen today. Could I buy this in my main Robinhood brokerage account? That is definitely a possibility, along with Kava. If we take a look at the chart for Kava, very similar since August 13th. It has been somewhat consolidating, not really doing a whole lot, and we have a gap all the way up to $82 a share. Now also keep in mind that it is very possible for Sweetgreen to make new lows, breaking $6 a share, which would also put it in that 10% free cash flow per share category. Obviously, according to Grok, they make about 60 cents per share, or 60 cents of free cash flow per share. So if they go all the way down to 6, that would put it in that 10% category that I like to see. But still, keep in mind, if any of you guys do plan on looking at this stock, it is definitely a possibility that it could break $8 and go all the way down to 6, and maybe even new all-time lows. All right, so now we're going to talk about whether or not we could see a stock market crash here in the near future, maybe 2026, 2027, as I've stated before, or maybe it even pushes out all the way to 2029, somewhere around there, which would be closer to that 100-year cycle. Obviously, if any of you guys don't know history, 1929 was the start of that huge stock market crash going into the Great Depression. So if we see something like that, then obviously this could definitely be pushed out all the way to 2029. But there was a chart that I saw on X. It was the NASDAQ, as the NASDAQ currently, placed on top of the NASDAQ going into the dot-com bubble. And as you can see, there's a lot of similarities there. Obviously, this is not financial advice, and this is not a guarantee that it's going to play out the exact same way as the dot-com bubble, but it's just something that I saw on X that I want to share with you guys. And obviously, if any of you guys wanted to follow me on X, that's my handle right there. And some other things I want to share with you guys, kind of relating to what we just talked about. On the QQQ chart, the ETF for the NASDAQ, if we go down all the way to where this gap is, near 530, let's see how much of a drop that would be. So that would be roughly a 10% drop. So basically, if the NASDAQ goes through a correction right now, it would take us all the way down to that gap around 530, which is definitely a possibility. And also, if we take a look at my top holding, which is Robinhood, starting from here, if we go all the way down to fill this gap, it is about 16%. So it would also be a correction for Robinhood stock. So obviously, this is not a guarantee. It's just something that I want to share with you guys, just to kind of keep your eyes open. But now we get to your guys' comments on my previous video, starting with T. Yeah, he says, new all-time high. I'm proud. Keep going. We missed you, bro, and I appreciate the kind words. We got Predictive Neo saying, hell yeah. And we have an interesting question from Infamous Jack. Do you believe in anything like God? And to be completely honest with you guys, I would say yeah. And I would even go as far as to say it's actually kind of logical to believe that there is a God. And what I mean by that is, if you believe in the Big Bang or whatever, obviously I'm not a scientist or a doctor or anything like that, but I would kind of argue that thinking that everything that was created was just an accident or just some random cosmic event, that is also kind of a stretch, in my personal opinion, right? Like, so believing that there is a God versus believing that everything was just a random accident, both of them, in my opinion, are kind of like in that category, in that realm of belief and faith, if that makes any sense. And we have Not Financial Advice that asks, WTF is this, bro? Why doesn't my account look like this? And I don't know how to answer that, to be honest. We have A. Carl that says, Robinhood got an upgrade, doing great. I do have some bear call spreads at the 135 level for the next month, just because I think the stock is overbought in the short term. But great video, keep it up. And definitely, I've already shown you guys what I think on the charts. There's a gap that we could revisit. It's about a 16% crash from here, so it's not a guarantee, but it is in the realm of possibility. And then we have Eyesbot that says Grinder is the future. That's a funny comment. We have TDTY saying, keep up the good vids, bro, but with all due respect, as someone with 2K shares in Hood, congratulations. You are missing a lot of easy money weekly by not selling calls. And also selling 1 or 2 calls a month or more isn't a hedge, bro. That's barely anything compared to stock value. You could easily pull multiple thousands a week in premium for safe 0.1 to 0.2 delta calls on green candles. I've been running this strat and printing. So first of all, congratulations. Having 2,000 shares in Robinhood is a lot of money, so congrats to you. And number two, as I've stated earlier in the video, I could have easily sold that same call I sold today. I only sold 1 contract, but if I would have sold 10, that would have been a quote unquote easy $1,000 expiring basically in 2 days. So I quote unquote could have made $1,000 in 2 days, but I choose not to because I don't know what the future is. And as I've stated in multiple videos, I don't like to cap out my gain. So obviously, I'm not hedging my account to the extent that I could, and I'm not milking as much premiums as I could, but I don't really like to be too greedy when it comes to hedging. I just like to buy stocks that I like, don't cap out my gains, and then whenever we enter a period that I think is kind of getting a little bit too heated, a little bit too much FOMO, that's when I like to gradually scale into those covered calls and hedges. But definitely I will be keeping that in mind, especially if we see like $200 a share for Robinhood in 2026, right? Let's say the market just keeps going up from here and we see $200 per share of Robinhood, then I possibly could go a lot heavier into covered calls. Obviously, I would have to roll out the ones that I have right now into next year, collecting a lot of premiums that way, and I possibly could sell maybe 500 to 600 more covered calls, or 5 to 6 I should say. So that puts like 500 shares up for collateral, and if all of those get sold off, I would be left with 500 shares of Robinhood, which is still an okay amount. But like I said, Robinhood is like a long-term stock for me, so I'm here for the ride. And at this point, I've been through so many corrections and bear markets. I'm kind of numb to them right now, especially the one from this year where I was down 100K in 1 year, and it was almost the same year that I made my first 100K milestone. So it's been an interesting year for me. And then we have Obi that says, I'm glad people like you are out there that post videos like this. I'm a big fan of your portfolio. I'm in a lot of similar stocks. Big inspiration, man. Keep going. And I appreciate the kind words.